We do, Jeff. I mean, first of all, happy New Year to everybody there. But we are also very cognizant of the high consensus that is out there now, and I do believe that depending on what happens to underlying growth in emerging markets towards February, March, we could have a lot more volatility. Now there's a trend. We do believe in positioning. We believe that generally speaking, investors were not necessarily prepared for this consensus bias towards EM. So there is a little bit of a catch up in terms of position, what they are carrying in their books compared to, what the consensus or the trading consensus is out there now. So we do believe this is quite supportive. And you mentioned the weak dollar. This is obviously a super important variable gaining traction now, and in the sense that, a weak dollar supports financing to EM economies. In a way, a weak dollar correlates with rebounds of EM growth. So obviously, we know that it's not only the weak dollar; it has a lot to do with the COVID story, which is still very uncertain despite the prospects of vaccine. So it's going to be the beginning of 2021. We tend to express a much more positive view in terms of EM positioning, but we do believe that that could be volatility down the road, especially if the COVID story doesn't improve.
Let's be a little smarter. Where in particular in emerging are you going to get the best return?
Well, we continue to like currencies like the Russian ruble. We continue to like currencies like the South African rand. They tend to have a very interesting cyclical component in there. So the view from an outlook back in December doesn't necessarily change, right? So it's still a view favoring currencies with a cyclicality component. And some currencies in Latin America as well. And of course, knowing that we continue with a bias of renminbi appreciation in China, which in a way also supports the general sub-asset class in EMFX.
Lewis, I'm so pleased that you're our first guest of 2021. Lovely to see you, my friend. Look, a couple of those currencies you just mentioned, the rand and the ruble as well, commodity currencies obviously as well. One of the big outliers that people are still waiting for in 2021 is potentially inflation as well. That will benefit, of course, those currencies and the underlying economies. But will it hurt refinancing globally for EMEA if indeed there is inflation?
And that's the biggest dilemma in the markets now. The markets don't know exactly where to go, because if we believe in a weak dollar, on a substantially weak dollar, which is definitely not our view, but if you're a believer of that, you have to be cognizant of the deflation trends. It's the case of, we do believe that we are probably, in the medium term, we will be probably dealing with deflation biases in the Eurozone, in deflation biases in Japan, for example. So, and on the other side, you have this, comeback of growth, the growth rebounds on the back of vaccine, on the back of a better improvement in terms of COVID conditions in the world. So we are stuck in the middle there. If we are, to your question, if we are in an environment where inflation will come back and the upside inflation will surprise the markets, you're absolutely right. I believe that tends to be highly detrimental, especially for those countries who are not necessarily the main high yielders, right? Curves that trade a little bit more tied to the core markets, the investment grade EMs, per se. So I think that can be an interesting factor here, precluding some investments towards these countries. But let's see where we go in terms of this tug of war between reflation and deflation trends given the weak dollar.
Lewis, if there was something our viewers had to avoid at all costs this year, what is it? What's so obvious that they mustn't touch?
So obvious they mustn't touch. Well, I think that they should be aware of positioning. I think there was Jeff who 5 minutes ago mentioned that, some of the ideas out there, they tend to be so consensus now. We are, in some respects, it looks like 2009. So investors have to be cognizant of the positioning and remain, relatively light in terms of ways to get out of their positions if the markets go sideways or if the markets go the other way. So I think that's my main word of caution here is watch your positioning, watch your risk.